So, Liz, welcome to the Suspicious Transaction Report.
Thank you, Tom. Glad to be with you.
So, I want to go back just over 3 years to late 2020, which must feel like a lifetime to you. When you joined the Biden administration's transition team, what were you kind of hoping to contribute to the administration's ambition at that time, given your kind of interest in Treasury matters?
My responsibility on the transition team was for national security matters, broader than illicit finance. It was also cybersecurity risks. We were looking at investment security concerns, and it was a very active time. Of course, the macro financial circumstances were challenging with enormous economic downturns globally coming through the pandemic. And in that environment, there was every opportunity for fraud as well, people preying on those disadvantaged by the economic circumstances in this contraction. During the transition, there were a couple of big events that happened and shaped the way in which the transition team prepares the incoming secretary and deputy secretary. That's the goal here. The SolarWinds hack occurred during that time. That became a major focus during the transition and then moving into the administration at Treasury, as with a number of other agencies. And also, Congress passed during that time the Anti-Money Laundering Act, including the CTA, which brought us now the beneficial ownership, creation of the beneficial ownership database, as well as a variety of other AML requirements, including the naming of priorities by this administration and others. So getting up to speed on what would be the plans, the prioritization of how to handle these various national security matters was paramount for me at that time.
So it was your second stint in Treasury. I think when we first met, you had just finished your previous stint. I mean, was it a different world to go into compared to 10 years prior, or do you recognize many similarities? How would you characterize it?
Both. There are lots of threads of consistency for which I was very grateful when coming in, including people, certain foundational authorities that were still very much in use. The key ones for countering terrorism, countering proliferation. There are the basis in law that gave us much of the Iran sanctions. That's all still there. Nevertheless, there's a huge growth in that intervening time when I was outside of Treasury. There had been a huge growth in the number of authorities, the size of the group at Treasury, the size of all of the groups doing national security related matters. And when I first came to Treasury, working in the capacity of counselor to the deputy secretary and to the secretary, I was looking after the whole of those national security domains and was joined subsequently by other colleagues who took on pieces of that. What was particularly different, though, was the mainstreaming of much of this national security work at Treasury by comparison to the time when I was there previously. I remember drafting speeches and testimony where I would explain, why does Treasury have a role in a national security conversation? What are sanctions? And by the time I came back, no one needed to do that kind of explanation, but there was a need to think carefully and take guidance from the leadership, Secretary Yellen, Deputy Secretary Adherence, on how they wanted to conduct sanctions policy, for example, which had become so prominent because it had become so prominent.
So let's drill into that a bit, because I think this conversation is going to mainly focus on the sanctions question. So one thing I remember from that first year, which came out, I think, at the end of the year, was the sanctions strategy review, a wonderfully short but clear document, again, in my view. So tell us about that. Why was it felt necessary to undertake that process?
Well, as someone, both of us have thought about sanctions for a long time, and I think we've thought about them, written about them, come at them, and probably appreciated many times over the utility of taking a pause and thinking about why you're doing something, particularly when you're doing it at a fast and furious pace and it has such enormous financial consequences. So coming into this administration at the beginning, the secretary asked for a review of sanctions. something the Deputy Secretary was very involved in and on which I worked extremely closely the whole time. The final public version you mentioned was short. That's true. That was a short version. But this was the Secretary's review for her of her agency and these authorities. So there was a much longer internal document and process, which also included a lot of internal audit and analysis matters that are of operational significance, so not as relevant to the general public. But it was a really good idea and opportunity for us to talk to this huge array of stakeholders inside government, outside government, because sanctions had really become something to everyone with no universal definition or concept, or certainly no university goal structure. So to be able to ensure that we had the lay of the land coming into this very dynamic space and take guidance, offer recommendations for how they should be used was essential. And as it turns out, that was very useful coming before this enormous proliferation in the use of sanctions associated with responding to Russia's invasion of Ukraine.
I must say that I find myself printing that out and giving that to policymakers in Europe quite regularly, including in the UK, where they're working on their own sanctions strategy at the moment. Because actually, as an external, as you say, it's kind of very clear. And if you follow those guidelines, then maybe we'd have a slightly clearer mission when it comes to sanctions. But before we get ourselves too distracted on the sanctions topic, you mentioned at the beginning the CTA, the Corporate Transparency Act, the Anti-Money Laundering Act, and all those things that were coming through when you first came into the administration. So if we just maybe talk about the kind of wider goals of the Treasury when it comes to illicit finance over the last 3 years. What things would you kind of point to that we shouldn't lose sight of given everything that's been going on sanctions?
So the illicit finance strategy is twofold. I think it can be simply distilled as offense and defense. You are thinking about, Treasury is thinking about how to strengthen the framework, the legal and policy framework to prevent illicit financial activity from occurring, and then how to respond to it in targeted, specific ways when it does occur. It does show up in the U.S. institutions or payment platforms. And there was a big agenda of work on both counts coming into this administration. So if you think about the CTA, setting up a beneficial ownership database, and other requirements in that legislation, much of that had to do with strengthening the defense and filling in gaps and giving the right kind of personnel and structures and processes and public clarification of priorities in order to get everyone on the same page in this very large economy with so many stakeholders, many people with different roles in the defense of the financial system and its security against money laundering threats. So on the other side is much of the work that's more publicly appreciated, the imposition of sanctions or other targeted measures pursuant to BSA authorities. A 311, for example, there is a new tool, a so-called 9714. It's a version of a 311. These are numbers. They make sense only to people who are deep in the weeds of these AML tools to target bad actors, essentially. But there's a whole array of more and more oftenly used authorities for exposing, targeting, and freezing the activities of financial criminals.
Should probably just explain, because for listeners outside the US, yes, those numbers won't necessarily mean a lot, but Section 311 is very important to international listeners because that, as I understand it, is the authority via which Treasury can designate an organization or indeed a country as a primary money laundering concern, and you do not want to get involved in one of those.
Right. It's proven fatal financially for institutions that have been targeted in the past. They are just numbers. Most people refer to them everything I've described as sanctions. I understand that. It's an easy parlance to get at the idea of the U.S. doing those offensive activities.
Yeah, we've got friends in Latvia who I'm sure are very familiar with the concept of a Section 311, given what happened to one of the banks up there. So I want to focus on sanctions now. And what really interests me is, of course, the Russian full-scale invasion happened on the 24th of February 2022, but there was a lot of rhetoric and I imagine preparation on sanctions as Russian forces were amassing on Ukraine's border. So can you kind of take us back to the end of 2021 into 2022? What was happening in the policy community to, I hope, prepare for sanctions that we hope weren't going to be used?
I started spending a whole lot of my time on Russia from months before the invasion. So myself, many of my colleagues in the U.S. government were looking at the developing intelligence picture, and it was totally clear what was happening with this amassing of troops at the border. And I recall when it was much more modest and it was growing more and more significant. And it was a great benefit when members of the intelligence community declassified pieces of that intelligence, making it easier to have conversations with counterpart governments, particularly G7 allies, particularly NATO allies, in order to discuss what we should all do about this situation. But nevertheless, it was so unthinkable to consider a land war in Europe, and so frightening to so many people that up until days before the first boot across the border, to use the language commonly used at that time, there were still close partners, people who I had done lots of sanctions work with before, who would say, I hope we don't have to do this, but if we do, this is what we shall do. And it felt to me because I had been looking at so much of this intelligence for so long, really frustrating to think we can be anything but utterly practical right now. We need plans. We need a whole series of steps here. What's the day one plan? What's the week one plan? What's the week two plan? And people obviously came to it. Europe was moved very fast in those first days, in the first hours, the first couple of weeks, in order to bring together a plan on export controls and on sanctions. And some constituencies may have been playing a bit of catch up once the reality set in, but they moved extremely quickly. Nevertheless, in those months beforehand, looking at that intelligence picture, we were considering what the right financial response would be. How far should we go? Could we go in responding to Russia's apparent re-invasion or further invasion of Ukraine? And what were the particular choke points that we wanted to look after? And you will recall a couple of themes there around how to specifically degrade Russia's ability to fight this war, looking most intensively at its financial services provision financial services and the role that they played in supporting and facilitating their military and military manufacturing sector. So those became the first two thematic focus areas of the work we did on sanctions and from the perspective of export controls as well.
And in a way, but those were the kind of the easy early targets to go for, because when you look now at how complex the sanctions have become, actually the idea of freezing the assets of a bank or excluding them from the capital markets and so on, that's kind of old. That's old school, and things have obviously got much more complex. So was that a conscious move, which was let's do the stuff that is familiar and in a way there is precedent for first, and then knowing that we'll have to go on to much more complex stuff later?
So actually, hearkening back to the sanctions review, I believe the first recommendation in that, which I remember discussing and thinking about with colleagues and how we should all articulate this in particular, was how to make sure to align particular goals with the sanctions implemented. So it may be the case that going after financial services is old school, as you say. On the other hand, the focus on financial services and military manufacturing was the goal, has always been the goal. The goal is not broader, hit them anywhere it hurts, hurt anyone who can be hurt. That was never the goal. It was specific to getting at the ways in which Russia has conducted its war, the ways in which it relies most significantly on money and materiel in order to be able to wage this brutal war.
But do you think we've got that message across as well as we should have done? The reason I ask that is because as an outsider, and there may well have been good reasons for doing this, but the rhetoric coming from political leaders as opposed to policymakers, I think of political leaders at that time in my country, in the UK, was quite hysterical on sanctions. We're going to decimate the economy. It was very belligerent. It wasn't, we are going to restrict the funding and resourcing of the Russian military. So I just wonder, and of course the fact that the Russian economy hasn't been decimated, which I accept was not the policy objective, but the fact that it hasn't happened has then been used in the kind of communications by the Kremlin against us. You know, we're fine. Actually, it's you in Europe who are suffering. So did we get the rhetoric wrong at the time?
I appreciate the point you're making and have thought about this a lot over the course of the last several years. And just to step back to that moment and to think with you about why people were making statements involving goals that went far beyond what we ever said the sanctions were specifically meant to do, which was to directly target the money and materiel Russia was using and drawing upon to fight this war. I saw them then, as I do now, as functioning on several levels. They were clearly meant to rally common cause and build a political coalition. They were meant to organize people around the gravity of this threat. They were meant to build broad coalitions and to speak in a way to Russia to demonstrate seriousness of purpose. And any technical analyst will tell you that the political language went farther than the particular sanctions requirements there, but it had a additional strategic effect for the people who were saying these things. They did manage to create an environment for private companies and individuals who were wondering about the reputational, not legal, challenges with associating themselves with Russia and continuing to do business there. And it caused a massive de-risking that went far beyond what Europe and the United States did as a legal matter on sanctions. And so that I see as also part of the goal for those people using particularly belligerent and hostile rhetoric, was to try and amplify the technical effect of the sanctions with some significant success.
Yeah, I mean, certainly we saw in the early months of the invasion, as you say, all sorts of businesses making decisions which were not a function of sanctions, but were perhaps a function of the rhetoric. And indeed, of course, the exhortation of the Ukrainians who wanted everyone out of Russia, you know, as soon as possible when it comes from a business perspective, which I think remains perhaps an area of worth looking at. But one thing which, again, is very interesting about that early period is that there's a night and day difference between the economic connection between Russia and Europe and Russia and the United States. So how did you kind of navigate that? Because I suspect, and you can confirm or deny, but I suspect that probably there would have been people in Washington who would have wanted to pull levers much faster and much more aggressively, but that would have had negative consequences on the European economy. How did you balance that?
Again, you're making this very easy for me to reach back to the sanctions review, which said, amongst other things, that trying to move multilaterally would be best whenever possible. So from very early on, we had the sense that it would be advancing our purpose to greatest effect to find every opportunity to work with close allies. It wasn't just Europe. I think we thought about the G7 as a core partner group from the very beginning. And others, of course, joined in. It was more than just this set of countries. And here I'm including the EU as part of this G7 body. So you're right. It's so significant that Europe has been much more interconnected with Russia as an economic matter, by contrast to not just the US, but other members of the G7, which means that in order to move multilaterally, you have to be quite careful. If you want parallel measures or similar restrictions, you want to match sanctions one to another, which has many desired benefits in signaling and consistency across law. It prevents the arbitrage for bad actors to try and move around sanctions somewhere by using a different jurisdiction. There are many benefits to trying to move multilaterally, but when you have a certain set of countries that are much more integrated economically and financially, you set up the necessity to move slower on certain things, or if you're moving fast, you might need a different set of licensing or carve-outs for certain actors, or a wind-down period for certain of those jurisdictions in order to try and bring everyone along at the same time, but not collapse a certain economic sector in a country which doesn't have the opportunity to pivot out or make alternative arrangements. So that was a huge challenge early on. I think we learned a lot of lessons right at the beginning.
So I definitely see that, and it makes logical sense at the beginning. But obviously, you mentioned parallel measures and so on. There are some sort of striking differences across the Atlantic, just simple things like people who are sanctioned in Europe and not in the United States. So I just wonder, why did those gaps emerge, and shouldn't we be trying to close those gaps? So I think of people who are on the designation list in Europe and not in the US, for example. How did those gaps emerge, and why have they been allowed to persist?
In general, I'm an adherent to the value in consistency across regimes. However, there are times when inconsistency may serve the greater policy purpose or be necessary. So, for example, when a certain individual or institution has all its assets or holdings in Europe and doesn't really have much of a financial footprint in the United States, it's not as significant for them to be designated in the United States. So that might be a circumstance where we might lose some of the messaging opportunity to not also name them in the United States. But if their assets have already been shut down, essentially frozen in Europe, for Europe to have moved first, then the energies can be better spent in the United States doing something else where there's more exposure and a greater vulnerability for a potential designation target. And beyond that, in many places in the EU and elsewhere outside of the United States, there is no way in a due process scenario to review classified material that may be part of a sanctions designation package. So a sanctions designation package, all of the evidence must be publicly available and unclassified. One thing that means is that it can be difficult to designate certain individuals or institutions in the EU or outside of the United States without that declassified information. And if there's information but it cannot be declassified, then that may lead to a circumstance in which the United States is designated because the United States can review classified information, including in court proceedings, whereas the European counterpart countries cannot.
Yeah, I mean, just there are some striking differences, and one always wonders, why that might be. There's another interesting dynamic that has emerged over the last couple of years, is where actually the United States has taken action in relation to individuals in the EU, particularly as the EU has kind of found it more and more difficult to get these packages across the line. The tempo of packages has dropped. So again, I wonder if you could just shine a light on when we've seen, and I'm thinking, for example, of cases in Cyprus where individuals were subject to designation by the United States. How does that coordination work? Do the Europeans ring up and say, we're really struggling with this, but we know this guy should be on the list. Could you do us a favor and take action? I mean, how does that unpack that? Yes, the UK has done that. Yeah, you're right. Yeah. Right. Which, by the way, goes to the dynamic nature of having a unilateral rather than trying to herd 27 cats, which obviously Brussels has found challenging.
Yeah, I think there's really good communication between the EU, the UK, and the US, as with other countries too. Everyone in the G7, there's a lot of good communication. The Five Eyes group, there's also excellent intelligence communication around Here we're still talking mostly about Russia sanctions. It exists on and other sanctions or other illicit finance activities as well. And that good communication leads to good coordination on sanctions designations. And I think both the United States, the UK, and the EU have all come a long way since in the last 2 years. The UK and the EU have come an exceedingly long way in developing the whole apparatus around sanctions. The UK has made remarkable strides. Even though the UK demonstrated that they were moving fast, creating new authorities, building out the structure, and they had a bit of a jump on the EU, having built out within the Treasury, HMT, more of the architecture and apparatus for around sanctions. Nevertheless, the UK has zoomed forward in this area, having apparently prioritized this post-Brexit as a body of law and administrative governance. But the EU too, you did mention the the EU being constrained somewhat by acting by the administrative nature of how sanctions are put into place. It's also constrained somewhat when it comes to enforcement, given that has devolved to the member state level, creating challenges around communication on enforcement, sharing relevant information. Sometimes when the United States has designated individuals in the EU, and presumably also in the UK has done this too, it's because a network will be multinational, it'll be transnational. So while the particular financial facilitators will be based, say, in the Gulf, there may be individuals in EU countries that are part of the movement of money or the sale of goods illegally into Russia. So the United States or the UK won't just name those nodes outside of the EU. They'll do the whole of the network, and the EU may catch up at a certain point and do the rest of those nodes. So there will be communication around it, but I don't think that these groups, they don't generally want to pull their punches, particularly if you have an opportunity to shut down the whole network.
Yeah, I mean, I referred to Cyprus, and I remember being in Cyprus shortly after the US and the UK had taken action there, and there was, I think, quite a lot of shock that, in a way, actually not anger, but wow, they've reached into our country, they've shone a light on a problem that we've got, and well, let's see how that country and others develop. Now, I want to talk about the oil price cap. So I don't think it's unfair or sycophantic to say that you are the oil price cap, or at least a lot of the thinking about the oil price cap. The oil price cap exists because of work that you did. And I remember when we first spoke about this, and I'm afraid I took the lazy position that many other people took, which was like, what are you talking about? It's never going to work. And I think you'd argue, well, you proved me and others wrong. So just tell us about the oil price cap. Not everyone necessarily understands what it's trying to do in basic terms. Where did the idea come from? How it started? How it's going?
Yes. What a long, strange ride this has been. But and also really interesting, and a journey I have compared to rolling a boulder up a hill. From the very beginning, you were not alone in being skeptical from the outset. But I do think that the policy has enjoyed some significant success in its development and implementation. So where we should start when we're thinking about the evolution of this policy was the EU's sixth package, where they imposed two really significant bans, embargoes, right? So one had to do with importation of Russian energy into the EU. That's fairly straightforward. I think that's accessible even to the non-energy expert, what that meant. It had a delayed effect, 6 months hence from when it was passed, but very significant given what an enormous consumer of Russian energy, oil, the EU was. The other embargo ban that they put in place in that package was to prohibit the provision of services related to the sale of Russian oil by EU service providers to everyone globally. Now, the EU as it happens, is home to a variety of significant service providers when it comes to the movement of oil on the water globally. And you had mentioned before how we had discussed how the EU, the UK, and the US all sought to work together aligning sanctions measures. And we were very much in a time then when we were trying to match each other's laws, restrictions, sanctions. Banning the importation of Russian oil was certainly one of those. The United States did that quite early on. But when it comes to the provision of services, the implications of all of those jurisdictions putting in place a parallel ban to what was in the EU's sixth package would have produced, potentially, an enormous spike in the price of oil. That's something that analysts at some of the big investment banks or energy market watchers examined. Some of the projections were quite high. 150 seems like a median estimate. Dollars per barrel was like a median estimate. Some of them were even higher. Now, who loses and who wins when the price of oil spikes to that amount? And there's still some amount that Russia can export, having some of its own ships, offering some of its own reinsurance, and being one of the world's largest oil exporters. Russia wins, gaining even more of a benefit on its windfall take in oil if it's allowed to collect that highly elevated price. And there's a whole lot of other countries, often very poor and food insecure countries, who cannot pay for oil in that circumstance. Also, the whole world pays higher oil prices and gasoline prices, which is difficult for everyone economically. So that is the genesis of why it was necessary to come up with a policy that did two things. The goals were reduce Russia's revenue and keep oil markets stable.
If I summarize where I got to in understanding, it's essentially, why would a country not want to buy oil at a price that is less than $60 a barrel when the market price might have at the time been 80? So the logic kind of made sense. The question then is, how does one police that? How does one make sure that indeed those service providers and so on are somehow adhering? Now, so explain to me, like, how does one understand, that oil is indeed being sold at a price that's below $60 and make sure that that's the case?
So what you've just said, you've just captured the economic incentive, the behavioral economic incentive we were trying to harness with the creation of this policy.
I got there eventually. See, eventually you persuaded me.
Well done.
Took me a while.
Well, that's exactly right. And it doesn't matter if you like Russia's war or not. It doesn't matter if you like the sanctions of the EU or the US. Every oil consumer similarly wants to have energy available, at an affordable price. So everyone should find this incentive structure appealing. So then how do you police? What we did was create a system where those service providers, and this is per the price cap, it set up a system where all of the service providers for oil moving on the water, so think here about trading, financing, ships, ship brokering, those kinds of services, insurance, of course, significantly insurance. Those service providers in the price cap coalition countries here, so this is G7, as well as Australia, they have to agree to only provide those services when the price of oil or associated refined product are below a certain threshold, the cap. And they have to attest to that and provide these attestations if they're asked for them. And so there was a system we created in close consultation with members of industry to try and arrive at a feasible to implement system. And we only called this policy done when we got to such a point and there were insurance providers and brokers and financiers who were willing to say, this is something I can work with. And they told us that by coming in to US Treasury to our counterparts in the UK, for example, and explaining this is what our attestation will look like. This is the form we're going to ask people to use in order to know that we're selling below the cap.
But I can hear people saying, as we're having this conversation, yes, but the price of oil seemed to come down naturally around the world during this period. And so selling below the cap was encouraged by the market. And so obviously the price of oil during the course of the last 6 months or so has risen. So what evidence is there that at a point where selling above the cap is an option per the market, the cap is biting?
So back to what you were saying about the price of oil being below the cap, that might have been a little bit of luck for the policy, and it got the policy off the ground. And it got everyone a good deal of practice in attestation while it was relatively easy to do so because the price was lower than the cap. So when oil did rise, and creating a situation where people may have been testing the cap and whether there should be any enforcement or not, the U.S. Treasury, the U.S. government, was concerned, just isn't the way you've noted, as others were, that people might have been cheating on this, creating an opportunity for gathering plenty of information, which the U.S. government did, and others, including by requesting specific records. I think that caused a bit of a ripple in the shipping and banking community as people could see that the enforcers were reaching for records here to do some checking. And then we have seen a number of enforcement cases, sanctions implemented by the United States. And one meaningful way to evaluate the efficacy of this enforcement is because we've seen an opening up of the spread between Brent and Urals, which is to say we see Russian oil selling below the cap. It's being forced to be sold below the cap because people are concerned that they will get named and targeted in an enforcement action if they're trying to cheat. And we've even seen the Russian energy minister complain about the efficacy of this policy relatively recently, which is about as good as it gets in talking about success.
So I'm going to remind you of the importance of enforcement on a topic we're going to talk about in a second. But before we get to that, I wanted to talk a bit about what we call in Europe third countries. I've lost count of the number of press releases I've received announcing that Elizabeth Rosenberg is off to some Central Asian country or other country, or indeed other colleagues of yours, very often in close collaboration, traveling with colleagues from the UK and the EU. So tell us a bit about those engagements. You rock up, you say, "Come on, guys, adhere to the sanctions." Why don't you? Talk us through those conversations.
Not only did I go to many countries, as you point out, with my counterparts from the UK and the EU, but I also went with counterparts from the U.S. Commerce Department, my policy counterparts that look after trade and regulations there. And the same is true for counterparts in Europe who had responsibility for export controls. So part of this is education with other countries. Part of this was clarifying the risk that they may expose themselves to if they act in a way that violates U.S. sanctions. And part of this was also demonstrating to these other countries and to Russia, the unity of the G7 in these policies and the commitment to enforce and look after and get after sanctions evasion or export control evasion where it occurred. And for the most of the last year, the sanctions that the EU, the UK, and the US have put in place have been exposing, targeting, shutting down evasion where it has occurred through all kinds of other countries, including in the Gulf and Central Asia and China. And so we have seen Europe go to new places in the use of its sanctions to name entities violating or circumventing sanctions outside of the EU. This look at extraterritorial measures or entities or networks outside of their physical jurisdiction is a comment on the utility we all saw in realistically understanding and targeting the ways that circumvention occurred through all of these third countries.
So I get the logic of the engagement, and I get the aspiration, but in early February, the European Commission wrote to EU member states demanding that governments crack down on the illegal flow of goods to Russia. And they noted that EU exports of banned items to non-EU countries had grown from 3 billion before the Ukraine invasion to 5.6 billion by mid-2023. So I suppose the question is, yes, the logic makes sense. Yes, I'm sure the diplomatic message was understood, but yet we don't seem to have restricted the movement of battlefield goods in the way that we would all like. So what's missing?
Let's back up a step. So I take your point. It's very important, and it's really important to have said that publicly and to up the ambition and the urgency of this effort. Now, these measures had an effect. It's not the case that we can say that they had no effect. What we saw with the imposition of these sanctions and export controls was a enormous drop off on the movement of finances and then controlled goods directly from these countries to Russia. That's good. They should not continue to flow directly there. It sets up the next challenge, which you are articulating here, to make sure that they don't move through third countries circuitously to nevertheless get to Russia. Russia, which is still not self-sufficient. It's not self-sufficient in its defense manufacturing. It requires sophisticated technology and components from Europe, also the United States, Taiwan, other countries, China, other countries. So there's an opportunity to identify and disrupt it. And one thing that we all learned here was that the level of export control enforcement we had was inadequate to the task at hand, which calls for a necessary amplification of efforts. You're getting at that in the comment you just made. And that sentiment was echoed by the G7, by G7 leadership multiple times over. So this is a good case of policy prioritization. One thing that I worked on significantly with counterparts was not the export control enforcement, but the financial side to this. So goods don't move on their own. There's a transaction that goes along with the shipment of a cargo of goods. And my point to financial institutions, and I did a lot of educating all over the world, was to explain that there's a way that banks can recognize the financial signature of the movement of the illegal movement of a controlled set of goods to Russia in violation of our law, or in a number of cases of their law or their own policy commitments. So we saw, not just in Europe where these are controlled, or in a variety of other countries where they're controlled, Taiwan where they're controlled, but elsewhere as well, in Central Asia, for example, where they have made commitments to not pass on immediately controlled goods, but to either apply greater scrutiny or to deny movement of certain items in certain ways. And some countries have adopted this practice with respect to both Russia and Ukraine. Fine. Nevertheless, they've decided to take a pause and look at it. But the point I had for financial institutions was, you are participating in supplying Russia in this war. If you do not stop and examine what you are doing financially, now is the time to ask more questions.
So you're guiding me nicely to where I wanted to end this conversation. But before we get to that, you mentioned, so the EU, and of course, I think if you look at the FAQs, the EU doesn't do extraterritoriality, but it clearly has the option and is beginning to nibble at the idea of extraterritorial application of its sanctions. But it is the case that it has been vanishingly rare so far for the EU to take action in that direction. So I guess where I would start to move the conversation is, how do we move from the situation we currently have, which is kind of warm words and diplomacy, to actually taking the gloves off and naming companies that are facilitating circumvention, even if that's going to cause a bit of a diplomatic rift with these Central Asian countries. So before we go to the financial element, how do we get these countries to really understand, or is it actually by hitting them where we know it hurts on the banking side?
Well, I think you just said it. That's a strategy. Clarifying that there may be political or diplomatic consequences to engaging in the supply to Russia of controlled goods, supporting and enabling its war. That flies in the face of European policy, foreign policy, security policy. Why would that be allowed to stand? So, one, the diplomatic messaging, and the European leaders, political leaders, have been very intensively focused on this. You just mentioned a public invocation of the need, the prioritization to elevate work and efforts in this area. And there's a focus on how to make sure that this is not just a trade, but also a financial set of work for countries. Nevertheless, you also just said this too, perhaps the consequence here for financial institutions, as with other shippers, traders, logistics firms participating in this activity, that shall be necessary in order to send a really clear signal.
So what's interesting is, going back to what you were talking about when we were discussing the price cap, is that there has been action against shipping companies and so on who have been facilitating circumvention of the price cap. And so the message is out there that this price cap implication is not imagined, it's real. Just before Christmas, December the 22nd, the world's worst timed Christmas present for any sanctions compliance officer in a bank, the White House issued a very strongly worded, in my view at any rate, executive order which basically made clear that foreign financial institutions risk losing access to the US financial system if they facilitated transactions related to the battlefield goods, the Russian military industrial base, which you started to talk about a little bit there. So it seems to me as though that's clearly needed because banks don't get it. What feedback have you had about that? Why did you take so long to kind of bring forward such a strong message, or why did it take so long to bring forward such a strong message? What were you hoping? People would figure this out for themselves?
Thank you for the question. For most of the last year, the US Treasury and colleagues elsewhere in the G7 engaged on really aggressive efforts to clarify the risk and name individuals and entities that were creating this risk, engaging in this circumvention. The U.S. issued a series of FinCEN advisories clarifying what red flags looked like, what the typologies were, many, many rounds of sanctions by the United States and European counterparts to disclose those middlemen and entities and networks that were engaged in this facilitation, led up to the creation of this authority, which, as you noted, is very severe, which comports with the gravity of the concern. And the reaction to that EO has really interested me. There are some institutions that look at this and appreciate how very profound, even existential, it is for them, and have done a tip-to-toe analysis, or launched one, to understand how they should, mindful of that potential threat, revise certain policies and procedures and relationships with correspondent banks and certain customers, clients. Other institutions have taken a different approach to note that EO, but decide it may not be relevant to them until certain entities are named, financial institutions are named under it. But from a policy perspective, I think it has been a priority for this Treasury, this U.S. Treasury, this U.S. administration to be quite clear that the message shouldn't be unarticulated and the consequences should be plain as day. so that no one wasn't warned.
Yes, I think as I wrote earlier in the year, it felt or it feels as though patience is perhaps running out. And that's an important point to consider because a critical point that was actually made by the European Commission President Ursula von der Leyen when she was in Kyiv, I think back in November, was we won't make the same mistakes we made in 2014, which partly is sanctions were put in place, but of course we didn't follow through. We didn't keep up the pressure, and we know Russia reorganized itself, and so the effectiveness that there was initially evaporated. So how do we ensure that people remain focused on these sanctions regimes on Russia with everything else that's going on in the world?
When I look back on the last 2 years, that even before Russia's further invasion of Ukraine, I see remarkable staying power and consistency round after round of sanctions, even when it looked to me like the EU had come through bruising negotiations and was all but exhausted, finished. I wondered if that was the case after the 7th, the 8th, the 9th package, and the EU has kept going because it is so fundamentally important to continue to address, understand, and respond to Russia's war. And it doesn't look to me, based on the progress of this war and global political circumstances, that this is any less appalling and concerning for people who are thinking about territorial integrity and democracy, and this will continue to hit very close to home. Also, now that the apparatus is up and running on sanctions and looking at evasion, and we've created new authorities here, the Export Control Coalition of countries that have built an entire bespoke export control regime around managing Russia's access or creating inaccess to components it needs for its war, it's going very strong. In fact, it is breathing new life into multilateral arms control in an era when Russia can no longer be a credible member as a country waging war to other international arms control treaty frameworks or agreement frameworks. And that gives me a lot of hope and expectation that the ambition will convey and that the G7 as a group will continue to focus on and apply energy to its response to Russia's war in Ukraine.
So you're optimistic about the kind of staying power of these regimes. Are you optimistic about the sanctions working?
Let me just offer that I'm optimistic about consistent motivation to translate this political sentiment into technical measures or sanctions. But I do think that will change and evolve as it has in the last 2 years. As to the efficacy, that depends on it has always depended on how you judge them. And back to what you said at the beginning, or earlier on in this conversation, we were talking about the enormous expectations that some people were lining up with these sanctions when it came to Russia and limiting its ability to hold at risk Ukraine and the world and to do great harm. The ambition and the goal structure that the US Treasury and the US government has always been working with was to meaningfully impede Russia's ability to gain the money and the materiel, the military means to wage this war. That is a goal that the sanctions have succeeded at advancing this entire time, and I believe is possible to continue to advance. That's different than a goal structure, which has been the case for other sanctions, which has much more to do with totally isolating or limiting the ability for a particular network or individual to exist in the international financial system. That's not what's going on here for the Russia sanctions or for the translation into sanctions of Russian foreign policy.
We need to stay the course. It's worth staying the course, and despite everything that's going on in the world, we should expect that to be the case.
It's worth staying the course. We need to stay the course, and the sanctions have to evolve.
Liz, thank you very much indeed for your time. I really appreciate the opportunity to sit down with you here in Washington and have this conversation.
Thanks so much, Tom. This has been a great conversation. I appreciate it.